Hey everybody, it's good to be with you today. My name is Brent Moores, and each week we go through different types of trades in this class. How do we actually find those trades? Today we're going to talk about 4 different ways to find potential options trades. And you're going to do that along with me and also with Mr. Cameron May, who's helping me out in the chat today. So as you have questions, feel free to utilize that chat, and we'll do our best to answer them, either myself or Cameron. You can also follow Cameron or myself on X as well, at Brent Moore CS, at Cameron May CS is our X handles. Now, before we get too far into this and actually going through those ways, let me just mention, of course, options do carry a high level of risk and are not suitable for all investors. And the information we're going to go through today, it's not a recommendation. It's not a suggestion for any particular security, chart pattern, or strategy. It's just information. It's educational information there for you. The paper money application we're going to go through is for educational purposes only. And for the sake of simplicity in this presentation, I'm really not going to be factoring in commissions, but remember, with multi-leg option strategies, there can be multiple commissions there that you need to factor in. All investing involves risk, including risk of loss. And short options can be assigned at any time up to expiration, regardless of the in-the-money amount. There you go. All right. So let's take a look at the market real quick. Here is the S&P 500. Big, nice boost today. I think as we were looking at this, in fact, we were looking at this a few days ago, we were going like this, and we were going, well, is this a resistance level that we were going to be able to break through? Well, today, maybe that's the answer. This market just has some bullish resilience to it. And so because this is what the S&P 500 looks like, a lot of the stocks we look at are going to kind of follow that. They're going to look fairly similar, fairly bullish there. But when we're going to do this, when we're trying to find options trades, you may want to find trades that aren't necessarily of this bullish look exactly this way. So how do we do it? How do we find options trades? And I'm going to go through 4 different ways. The first way is actually just a general common way that I will do it. And that is I've created a watch list and just a general watch list of stocks that are maybe more appropriate for options trading than other stocks. What do I mean by appropriate for options trading? I mean liquid options, stocks that have liquid options. Now, just because we say a stock has liquid options does not mean that every single option that stock has is necessarily going to be liquid. But you don't want to have to go through a whole bunch of stocks. Not that many stocks are not appropriate for options trading. So what we're going to do is we're going to create a general list for optionable stocks that are probably more desirable. And when I say more liquid, those are options that are traded more often. Typically, the way we're going to do that is find stocks that are trading at a higher volume and that have tight bid-ask spreads. And when I mean tight bid-ask spreads, usually I'm looking at somewhere less than 10% difference between the bid price and the ask price. So first thing, we'll create a general list. Now, I actually already have one up. You can see that right over there. That's kind of a standard one that I have, but I just labeled it liquid options. Let me show you how you can create that list for yourself if you like. And of course, there's not one way to do it. There's different ways to do it. But if you want to create a watch list like this, look, you can actually just type in ticker symbols here. If you want to create a watch list, you can go down to your watch list. You can click on your watch list there, and you can create a watch list here and type in one symbol after another. That's not what I did on this, but if there's just a very certain set of stocks that you want to trade, look to trade over and over again, maybe there's a set only 10 or 20 stocks you want to do that, you can just click Create Watch List right here and create that list. But another way to kind of create this general list is to start with the scan. Once you create a scan and save the scan, it will show over here under your personal watch lists. Remember, just a reminder for those of you who are maybe are not as familiar with Thinkorswim, there are public watch lists, which are watch lists that are available for everybody. There's also personal watch lists. Personal watch lists are only ones you're going to see. So if I click right here, I can see personal watch lists that I have that are unique to me, and I have public watch lists as well that all you guys are going to see as well. So when you create your own scan though, and you create that list, it'll come up with something that looks like this. Here's one I have, bull scan 1 month or whatever, okay? I just named it that. This little purple symbol to the left of it means that it started as a scan. It's a dynamic watch list that will update as the scan updates and give you stocks that are relevant to that. Now, this bull scan may change day to day. The one that I've created here that I'll show you what I put in for liquid options, it certainly can change, but the reality is the parameters that I have probably aren't going to change that often, so that the list is going to change that frequently. Okay, so this is one way I do it. This is the first way I'm talking about finding optionable stocks. So I'm going to click on scan, and I'm going to go to stock hacker, and to create a scan, let me just do this. Let me get rid of some of these. Let me get rid of the left-hand column. That'll make it easier. Let me X those out. What you're going to do is you're going to add filters on this scan. Okay. So if we're going to add filters to the scan, it gives you a choice when you click on this. Remember, I'm on scan, stock hacker, clicking on add filter. It has different types of filters. Now, some of the scans I may do today may employ study filters. This particular one doesn't, but I don't think. Let me double check. I got to think about this one. But study filters are not available on Paper Money. They're only available on your live platform. Now, this is actually Paper Money, but it emulates a live platform just because I'm an instructor here. But so you can't use, if you're trying to do it and it's saying you don't have study available, you can't use a study filter, it's probably because you're on Paper Money, okay? But what I've done is I've created a scan. Let me just pull it up right here, and it's called Liquid Options. Let me tell you what I did on this one. Number one, above where your scan filters are, you can scan in certain areas. And what you're going to see with these parameters is I'm just going at liquidity. S&P 100, these are the 100 largest stocks basically out there traded in the US markets. If I click on here, and to add that, I'm just going to go down and I'm going to go to public, and S&P 100 is where I would create that. If you want to create this along with me, you're welcome to. Okay? You're absolutely welcome to. Another one, I have intersect with. Intersect with, this is a public thing. This is another public one, penny increment options. I'm going to go down to public, and I'm going to go down to penny increment options. That just simply means those option prices can change in penny increments. On some stocks, if you look at the options, you'll notice they change in 5 or 10 cent increments. The price will be 305 and jump to 310 to 315. You'll never see something where it says 313 for that option price. That's not a penny increment option. Penny increment options tend to be more liquid. So, therefore, if I'm scanning in the S&P 100 and I'm doing penny increment options, I'm going to get more liquid options there, okay? So that's the first thing. Now, you could do S&P 500 and it'll probably open it up to a few more stocks. You can still do that if you do S&P 500 along with the other items I'm going to list here, then you'll probably still get fairly liquid options there. Okay? So let's do this. S&P 100, penny increment auctions, you can build that. Then for these, you got to add a filter. This next one, you probably don't even need to add. It's a last price of 100, but last price of 10. But to be very honest, the S&P 100 stocks, I think probably all of them have a minimum price of $10 a share anyway. So that's probably not going to help you that much. And then finally, I do have a study filter. I forgot if I did or not. I do have a study filter on this. You would just simply click on Add Filter, go to Study. It's going to add that study filter, and you can go down and click on a volume filter, and I put in average volume right there, average volume, and I just said the 50-day average is greater than, and I put 5 million shares, okay? I put in 5 million shares in there as a minimum. Let me delete that. This is how it lasts. And now when I click on scan, this is what I'm going to show. I have a list of 53 stocks here. These, some are going up, some are going down. This list tells me nothing about exactly what type of option trade I want to do. But a list of 53 is manageable. And if you're doing things that are more, say, technical analysis based, that is more looking at charts initially, then what I can do is I can take this list, I can bring it up as a watch list on the left. Remember, once I save it, and to save the scan, you just click right over here in this little 3-line menu on the upper right. Okay, I'm going to I'm going to save scan query, save it to whatever you want. I just labeled it mine liquid options. And now when I want to look through these stocks and look for potential trades, what I can do is I can just start at number 1 and look and see if I find a trade that I want. If this looks like a chart that I want to trade, and then I can scroll through one at a time. Just use if you have them linked, by the way, link your chart to the left-hand column. To link it, it may start out like this. Click on this, pick your favorite color or number or whatever, and make sure that is there and there. And then as you scroll through on this on the left, just using my arrow key on my keyboard, it just goes through and it'll load one. Do you see how quickly, if I'm looking for a bearish stock, say, I can just kind of scroll through and find, oh, there's one that's going down. Or if I'm looking for a bullish stock, well, there's a bunch out there that are right now. You can quickly go through a lot of stocks. And to be very honest, okay, when I'm showing you examples in this class, probably more often than not, this is the method that I'm using to find examples for this class here today, okay? And I'll show you the bid-ask price thing just in a sec. We have a question on that there, and I'll show you what I meant by that in just a minute, okay? But here's what I'm going to do. You scroll through, you can quickly scroll through and find one you like. If you say, oh, hey, this looks, in this case, bullish, and I want to do a trade on this, what can I do? I'm going to say, well, maybe I want to do this as maybe a trend trade that's going up. And now we have earnings, but you know what? If I'm planning on holding this for a while, I'm going to hit earnings every 3 months anyway. So let's do a trade here on this real quick, just as an example. And I'm going to go out a little ways, and I'm going to do a long synthetic, okay? So what's a long synthetic? A long synthetic is you buy a call and you sell a put, and it looks like it basically has the same characteristics in terms of a risk profile as the underlying stock. Okay, that's what a long synthetic is. So I'm going to go out a little ways. And when I'm talking about the bid-ask spread here, Here's my ask prices on my call. Okay? I'll go to the 17 strike. That's basically at the money here. Here's my ask prices on my call. Here's my bid prices on my call. What's the difference between these two? About a 3-cent difference. Well, what would be a 10% difference? A 10% difference would be about a 6-cent difference on a 60-cent option, okay? And, or for example, on this contract, 126 by 122, that'd be about a 12-cent difference. I'd like to keep it tighter than that generally. That's just a rule of thumb. And just because you find liquid options doesn't mean the stock is going to cooperate. It doesn't mean the option is going to turn out well. But in this case, I'm looking for a bullish trade. I'm going to click on the ask price on the call option. Okay? I'm going to go to the put, and I'm going to sell that put option there. I'm going to hold down my control key. When I hold down the control key, it makes it so it doesn't overwrite the initial trade. And this would be a long synthetic here, okay? And it's going to cost me about 24 cents or $24 for this trade here on this. And if I click on confirm and send, let me just put this in the right group there. And there we go. I am buying the call, I'm selling the put, and then I can place that trade. Now, I would only do this trade if I felt this stock were going to continue to go up. That's a long synthetic, all right? And just for your purposes, if you want to look at what this would look like here, let me just bring this up. Here's AT&T. Make sure I don't have any other trades on this. I don't. This is what a long synthetic looks like on the risk-reward graph. Here's my potential profit or loss. Here's my break-even point. Here's my underlying stock. As the stock goes up more and more, if the stock goes up more and more, you make more and more money. Okay? If the stock goes, just like with this, that's on the option. If the stock goes down more and more, you're likely to lose more and more money on the option. Okay? So this was not a long call and a long put. This was a long call and a short put, everyone. A long call and a short put. This is what you call a synthetic, a long stock. And why is it called a synthetic? Because it substitutes for a stock. Do you see this? This is what a stock looks like. This is what the risk profile of a stock looks like. The more the stock goes up, the more money you make. The more the stock goes down, the more money you lose. The same thing on that long synthetic, except instead of spending, what was the trade price on? Instead of spending $1,600 or so for 100 shares of stock, I'm getting essentially the same movement, roughly 100 delta, okay? Essentially the same movement just on the options trade that cost me 20 bucks, I think. Now, remember, this is a leveraged trade, so the risk is still there. Even though it's costing me less upfront to do the trade, the full risk is still there if it goes down. This is a Delta 100 trade. Now, for those of you who are going, boy, I don't know what Delta is. I don't know. I don't understand this. Okay? Let me just mention something to you. This is an advanced options class. If you are new to options, let me also highly recommend we have a Getting Started with Options class. That occurs on Tuesdays at noon Eastern time. Make sure you check that out if you want to brush up on your options skills there. Okay? Now, long synthetics as opposed to just a long call. Long calls are going to have a negative theta on them. Your time decay is going to hurt you. By doing the synthetic, the time decay is going to roughly balance out, so the time decay will be fairly low on that. Okay? So there we go. That's a long synthetic, and that's the first way I wanted to mention to you in terms of how to find potential trades, and that's just an example trade on that for you, okay? Let's go to the second way. Just to summarize, the first way, doesn't matter what kind of trade you want to do. You can just scroll through your list and find a stock that matches your forecast. But maybe you want to scan more specifically, okay? You want to create a scan for a specific type of trade. So let me do this. Let's bring up a scan, okay? And I'm going to create a new scan here. Now, most of the stocks out there on that list right now are fairly bullish. Let's say we want to find something that is trending down, something that is more of a bearish scan. Well, let's create that. In this case, I'm going to open it up a little more. Instead of S&P 100, I'm going to go to S&P 500. Now, I still want liquid options. So I'm going to intersect that with my penny increment options list. Now, if I want to, what I can do is I could also intersect that instead with what we just did. I could go to the watch list you maybe just created and go to a liquid options watch list. That would be perfectly acceptable as well if you want to go through the process of saving that scan, that watch list. But for our cases, I'm going to do this publicly available watch list. It's available to everybody here, and take S&P 500 stocks, which a lot of them are pretty options liquid, but by intersecting it with penny increment options, it's certainly going to narrow the list quite a bit. So instead of 500 S&P stocks, by adding in penny increment options, we're down to 152 stocks. Okay, but we're going to narrow this down further because what we want to find stocks that are more bearish, okay, that are trending down. So what I'm going to do for that is I'm going to add some study filters here. I'm going to click on Add Filter. I'm going to click on Study. And in this case, I'm going to go to Price Change. To find on Price Change, I'm going to go right here to Price Performance. I'm going to go to Price Change. And what I'm going to say is, I want the closing price to be at least 2% less, because I'm trying to find a bearish stock, less than what it was 10 bars ago. Okay, that's 2 weeks basically. 2 trading weeks, roughly, 5 trading days in a week. I know we just had a holiday, but I'm just going to kind of generalize this scan there. Okay? Now, that may just be a 2 week, but I want something a little bit longer too. So I'm going to add another filter, and I'm going to add another I'm going to do the same thing. I'm going to go to Study Filter. I'm going to go to Price Performance, go to Price Change, and I'm going to say, I want this to be even more down, 4% below where it was. And I'm going to put 21 days in there, or 21 bars. Why 21? That seems like an odd number. Why not 20? Well, on average, as I understand it, there's 21 trading days every month. Okay, so that's basically looking back a month. And let's do this one more time. I'm going to Add Filter, Study Filter. I'm going to go down to my Price Performance. I'm going to go to Price Change. Close is at least, I want this less than, and less than. These should all be less than. And I'm going to say 6%. 6% less than it was, and we'll go 2 months' time, 42 days ago, 42 bars ago. They're daily candles here, okay? So let's kind of summarize here for a sec, okay? Let's summarize for a sec. I don't really care about too far back. If the stock doesn't need to be below where it was a year ago, I'm looking for a shorter term downtrend here. And that's why I'm going a couple weeks. I'm going 2% below a couple weeks ago, 4% below a month ago, 6% below 2 months ago. You can play with this however you want. And then if I scan, I can scan that and come up with some there, okay? Now, let's do this. Here I have stocks that have come up. If I wanted to, I could add in a parameter. Maybe I want to avoid earnings. Okay. We're at the beginning of earnings season. There's a lot of companies that have earnings. If I wanted to do that, I can add that parameter here, and I'll show you how to do that. Another way to do it is just look right here. This has earnings coming up. If you have these symbols right here, the blue and red symbol, that means you have earnings coming up on these stocks. So if I want to avoid those, I could avoid those, okay? This dollar sign, that's just a dividend right there on that, okay? So what I can do then is I can go and click on whichever one I want. I can save this search just like I did before. Remember, to save, you click on the three little arrows, click on Save Scan Query, and when you do so, it'll bring up a window, and you just got to name it. This was my old search, so this is a different search. I would rename this to something else, okay? So there we go. So I can go, and if I want to just use this in the future, I can do so and use it as a watch list and just look for my watch list and scroll through just like I did. And as Chris said, lots of energy stocks in there. I do like, by the way, on your scans, if you'd like, you can customize these columns that show right here. I kind of like to see what sectors are showing. And so I usually have that down there, the sector. If you do want to change those column headers, just click on this little gear icon that's far right of the screen, right there if you want. And then if you click on that gear, it'll allow you to customize and add the columns that you want. Now, maybe we have some energy ones. I got some energy ones. Let me also look at, we'll look at materials here as well. That Mosaic doesn't have earnings as well. But these should be reflecting stocks that have been going down more. Here's APA, been going down, okay? Do you see how with the scan, and you can save the scan, so you don't have to build it each time, just save it. And then you can quickly find stocks that are going down. Here's CTRA, okay? Here's the non-energy one, here's Mosaic. There you go. And so what you can do is you can then say, well, look, I want to do a trade here on this. And look at the stock. Find a stock, and if you want to do a bearish trade, you can do a bearish trade. In this case, I'm going to do a bearish trade, and I'm going to do more of a probability-based trade. What do I mean by a probability-based trade? I mean one where we're going to look at the statistics of it in the sense of we want a stock that's most likely from just a statistical standpoint, and that's no guarantee of future performance or what's going to happen. It's more likely than not to stay below where we want it to stay below for our trade. Okay, so what I'm going to do is I'm going to go here. I'll go out about 28 days, and let's do a bearish trade. Let's do a short call vertical. Ooh, let's see if we can find. That one's exactly not the, let me see if I can find some strikes that makes sense here. Okay, this one's kind of right on the cusp of what we'd say the 10% spread is, right? 10% spread on a 70 or 80 cent stock is about 7 or 8 cents, so that's right about what we have. I'm going to sell this. This is going to be a short call vertical. On a short call vertical, I'm going to sell the lower strike price. And why am I picking this strike price? Because on it, my delta on this strike price is about 32. The delta of 32 implies that there's roughly a 32% chance of this option going in the money at expiration. Well, we don't want it to go in the money at expiration, so we kind of like the lower delta. Now, we can go to a lower delta, but generally you don't get very great premiums if you get that lower delta there. So I'm looking typically for like a 30 to 35-ish delta. So here's what I'm going to do. I'm going to sell this contract. Minimize this right here. I'm going to go down and I'm going to buy this contract, the next strike up. You can go too wide if you want. I'm just going to go one wide here. I'm going to hold down my control key so I don't overwrite the other one. And here's what I have. I have a short call vertical spread. It's giving me about a 25-cent credit, which is roughly translates to about a 33% return on risk. Because my credit on this, my risk on this is going to be the difference between the strikes. 35 minus 34 is a $1 difference between the strikes, minus my credit, which is 25. So that's going to give me 75 cents a risk. 25-cent credit, and that's my max gain. 25-cent credit, 75-cent max risk. That gives me a return on risk of about 33%. Okay. Now, what do I want? I want the stock to stay below 34. Okay. That's right about here. Let me just draw a line right there just for our reference. About 34, kind of right in that range there. If I don't think the stock's going to stay below 34, I wouldn't do the trade. Okay. I wouldn't do the trade. But in this case, generally it's kind of gone down, relatively bearish. And we know there's roughly a 33% chance of it going above there, which implies there's about a 67% chance or something like that of it staying below this level. This is a short call vertical. Okay. Now, there's a question. The question was, why did I choose the 23rd? Well, here's the answer on that. These are trades, the short call vertical trades take advantage of time decay. They're theta positive trades. Every day that passes, there's a little bit of time decay that helps us on that. But the rate of time decay is greater. The rate of time decay is greater as you get closer to expiration. So that's why I didn't want to choose out a long ways away. I initially looked at the 28 strike, the 28-day till expiration strike, the February 16th, which is about a month, which is usually about where many traders will target this. But when I looked at the deltas, there was nothing in that 30 to 35 delta range there. So I went out just a little bit further. I'm still kind of in the ballpark of the month that often in this class we look for. That's how I came up with that 2/23 expiration date there on that. Okay, good question. Thank you for asking that. Okay, now let me go here. Here's the trade. This is a short call vertical spread. And of course, I can do more contracts if I want. Just remember, short options can be assigned early. So, but typically on the management of these, we're not going to let it go all the way to expiration. Now, by saying that they can be assigned early means exactly that. They can be assigned early. It doesn't mean they will. If it's out of the money, it's unlikely it'll be assigned early. It's very unlikely it'll be assigned early, but it is theoretically possible, even if it's out of the money. If it goes in the money, it's more likely to be assigned early. If we get closer to expiration, it's more likely to be assigned early. Usually we're going to look to exit these about a week until expiration. Usually we say about 4 to 10 days till expiration. We're going to look to exit these short call vertical spreads or short put vertical spreads for that matter as well. So what I'm going to do is I'm going to confirm and send. I'm actually going to move this just off just to see if we can make sure we get a fill on this. I'm going to confirm and send this. Make sure you read the little red note there on that. And we're going to go and we're going to send that order. And we've just thrown in another order there, and that indeed filled for us. We've now added 2 trades in our repertoire today here. Okay. Now, I need to move a little faster here, and I want to talk to you about a third approach to finding options. The first one, create a general watch list and just scroll through it. The second one, create a more specific scan. And in this case, we created a bearish scan, and save it, and then you can target more specific types of trades. Another approach is to use what's called the spread hacker. For that, you can click on scan, you can click on spread hacker, and I have one created for us already here. If you'd like to if you'd like to write down, if you have a pen and paper or something, or if you want to build it alongside what I've done, I'll kind of go through these real quickly and show you what I'm getting at here. Unlike the first two scans / watch lists where we were looking at the underlying stock, on this, we're not starting with the underlying stock. We're starting with the option itself. And so what I'm doing is I'm looking specifically, we'll do another vertical spread here. I clicked on vertical. You can start with all and look at all sorts of trades, but I'm going to look at vertical for this particular one. And I want it to be liquid, so I'm looking for those liquid options. Remember, we started at the top. Our first thing we did is we talked about how to create that as a watch list. You could also use penny increment options if you wanted to there or something like that, okay? But here's what I have. Underlying price. I'm looking for an underlying stock price. This underlying means the underlying stock, not the option itself. Minimum $20. Okay, that doesn't really narrow it down too much, does it? Because on my liquid options list, that's actually probably completely unnecessary if you're going to use the liquid options, because as you can see from here, they're all above $20 on this, but minimum price $20. But that's probably a handy parameter to use if you're not going to narrow it down to liquid options, okay? If you're just looking in maybe S&P 500 or something like that, okay? Probability of profit. What we're looking for is, I want a higher probability outcome. Now, higher probability sounds great, but there's a downside to higher probability as well. Generally speaking, the higher probability the trade you're looking for, the lower your max profit or your return on risk is going to be. So I put in a probability of profit of 65% minimum. 65% minimum. Now, you may ask, why did you cap that out with something? Why not just put 100%? Wouldn't a 95% probability sound good? It would, but what I've found, just my personal experience here on this, is if you don't cap it out, sometimes you get some kind of very far out of the money options with very large bid ask spreads, and it kind of can mess up the results you get. Now, you may say large bid ask spreads, but I thought you were using the liquid options. Well, I am. However, even if you're out of the money far enough, even these liquid stocks sometimes will have some illiquid options. So that's why I put in that max parameter. I actually don't mind having a higher probability of profit, but sometimes you get some screwy results if you do that, okay? Max profit is another one I've added in. You can just change that right here, max profit. I put in minimum 40%, okay? So 65% probability of profit, max profit, minimum 40% here. 70%, I capped that out again for the same reason that I capped this out. Sometimes you get some weird results if you get numbers up near the 100% range. And days till expiration, I went out roughly a month. You remember when we were talking about that past vertical spread, we talked about a month? That's kind of the range I wanted. Let me just scan that. Okay. We're going to scan that. And you can find, now, if I want something that's maybe, look, this would be a short call vertical. We just did a bearish short call vertical. So let's go to short put verticals. Here, this is giving me Citigroup, and it's giving me a 50.49, 16th of February. Let's take a look at it, okay? First of all, let's look at Citigroup and see, is it reasonable to do a bullish trade on that? I think so. We've pulled back. If you don't think this is likely to hold here, where we've kind of pulled back and leveled out a little bit, if you think that's likely to go down, then you probably would not do this trade, right? This is a bullish trade. And let me just refresh myself. We said at 50 and 49, 16th of February. Let's look at it. Let's go to 16th of February. Here we're at 28 days, 50 and 49. So here's our spread, nice tight spread. That's because we scanned in the liquid options. I'm going to sell the 50, which is a 32 delta. So that's right about where we want. I'm going to click on that. I'm going to sell that. And the 49, I'm going to buy that. I'm going to hold down my control key on that one. Okay, so we got a 28-cent credit. Let's confirm and send that and look at this. Okay, 28 cents divided by my max loss of 72 cents gives me about a 39% return on risk. Okay, 39% return on risk. So there you go. That's kind of pretty standard of what we're looking for here on this. And let me just put this in, and I'm running down on time a little bit, so I'm just going to put this in a little quicker. I'm going to put this in our multi-leg options one, and I'm going to actually going to edit this order. I'm going to go down just 1 cent to try and make sure I get a fill on that, since I want to get it filled in this class. There we go. We added in, that's a bullish trade. We want the stock to be above 50. If you don't think the stock's going to stay above 50, which is right about there, if you don't think the stock's going to stay above there, then you probably want to do this trade. Again, we'll probably exit before expiration on this. About a week before expiration is often a time we target on this. But hopefully we're going to get a bounce, or even if it goes sideways, we're okay on this, as long as the stock stays above $50. This is a short put vertical. Okay, let me give you the fourth and final approach to finding options that I want to talk about today. And that is, you can actually look at options that other people are using. I'm going to click on this ISE spread book. This is just a list off the NASDAQ of spread trades that people actually have as working orders right now. So you can see what other people are trading. Let me give you an example. Let's say you go through this, and this one you'll probably want to narrow it down a little bit. I mean, you don't have to, but let's say you're looking at, I'm going to say Apple because that's kind of a popular stock that people look at. Doesn't mean it's going to turn out or anything, but it's just an example stock that a lot of people look at. And you're saying, well, Apple is maybe a little bit more of a neutral type trade. I want this to go, I want to look for more of a neutral type trade. Well, I can go to that scan, you can go to that spread book, and I'm going to look, and I can narrow this down to, look, different types of trades. Calendars are neutral trades. We've done quite a few of those. Butterfly spreads are neutral trades. And now I can see, let me put an Apple. I forgot to put an Apple there. In the symbol box, you put that in, see if we got anything. There we go. Okay. We are, let's do, so here's a butterfly spread, 180, 170, 190. This would imply, this trade right here would imply we're looking for the stock to be around that 180 range. You look at the chart and you go, hey, do I think it's going to be about the 180 range? And maybe you say, maybe not. I think the stock is probably going to stay maybe in the range between here and here. Therefore, that trade isn't appropriate. And absolutely, you just got to kind of decide which trades are appropriate for you and which are not, and see whether they match what you want. And a lot of times you may strike out. I will be honest, this is not my favorite approach to doing it, but sometimes you can generate some ideas that maybe you wouldn't otherwise think about by looking at this spread book. You don't have to narrow down the stock. You can just do this and it'll look at every stock. You don't have to narrow down the strategy. You can do this and just see other trades that people are doing. But it's kind of like your mother probably told you when you were little. Just because your friend does something dumb, don't do something dumb. Don't just follow what other people do blindly. But maybe there's some good trades out there. You need to discern yourself and do your own research on those. But they're ideas, they're idea generations. They're not recommendations. Nothing I went through today is a recommendation. They're just approaches to finding options in the market. The first one, create a general watch list through a scan of liquid options and just scroll through it. The second one, create a specific scan for bullish or bearish or neutral. We showed you how to do that. Third one, use that spread hacker. Okay, I showed you kind of a sample spread hacker for a vertical spread. And the fourth one, see what types of trades other people are doing here on this spread book. All right? Okay, everybody, I want to thank you for joining me today. I do want to thank Cam for helping me out in the chat. I do appreciate Cam. And in fact, let me just make sure. And I apologize. My chat function kind of went out, so I didn't see some chats that came in towards the end. So I appreciate Cam for checking those out for me and helping me out on those. Everybody have a wonderful day. Coming up next, ThinkScript studies. So check that out. And in the meantime, have a wonderful day and a nice weekend ahead. Bye-bye, everybody.